After the break, lithium and its great promise for Western Australia. Galaxy Resources CEO Anthony T joins me live from Perth.
Now, back with Ticky Fullerton.
Let's come back to lithium now and have a closer look at one of these listed Aussie lithium plays, Galaxy Resources. Galaxy's share price has shot up this year, with volatility too, though, and it's one of the most shorted stocks, or has been, on the market in recent times. Galaxy has three major assets, two hard rock mines, one here in WA at Mount Catlin mine in Ravensthorpe, one in Quebec, and very interestingly, one in South America, the Sal de Vida lithium potash brine project. This week, it's released a project update on the feasibility study. Sal de Vida there. Galaxy Resources Managing Director Anthony C joins me from Perth. Anthony, great to see you there. Can you tell us a little bit about your update? Because obviously it's such an important project out there for you.
It is very much our next flagship development. We're very excited about Sal de Vida. We've just released an updated feasibility study, which essentially will be looking at investing up to about $474 million US. And as you may be aware, the lithium market at the moment is very robust in terms of demand and also pricing. And so the economics on that project look very attractive to us. It gives us an NPV of just under $1.5 billion US, which in Australian dollars terms is close to $2 billion.
That's what I'm looking at here, 1.48 billion US. It's staggering numbers, really. Now, one of the things, of course, that's gone up with that higher valuation is the higher costs. Was the market happy about that, do you think?
I think generally they recognise that we are at a stage now where we're about to kind of make that final step in terms of moving into development and construction. And so this is literally a pre-construction, pre-development kind of budgeting exercise. We believe we've been a lot more prudent in terms of allowing for contingency and working capital allowances. So I think generally the feedback from shareholders and investors has been positive.
Okay, you've had high debts before, obviously, and presumably lessons learnt there. Now you've taken on, as I understand it, JP Morgan after a bit of a parade there to advise you, JP Morgan Australia, to look at some sort of perhaps strategic partnership, maybe selling a portion of the project. Is that right?
Yes, definitely. I mean, we have appointed JP Morgan as our financial advisor on this project, and you're correct. Galaxy in the past, what I would refer to Galaxy 1.0, previously had a lot of financial pressures with the previous balance sheet, and that was one of the reasons why I ended up coming on board and becoming MD. But essentially going forward, we have a lot of strategic interest in partnering on the assets, and JP Morgan is helping us on evaluating the best options and obviously the most attractive proposition to us in terms of advancing and financing the project going forward.
What is the most attractive, the money or who the partner is? Because it looks like Tianqi is interested, maybe POSCO, all these very, very big players. What's it like having a big player like that as your partner?
I think one of the key things is obviously if you look at the Sal de Vida project, it's a very long life, low cost project. The thing that is actually important to us is actually relationships with the partner going forward. And in a 40-year kind of mine life, it is actually very critical to actually find the right partner with the right structure. So I think it's a combination of obviously a fair recognition of the value of the asset and its potential to create shareholder value going forward. But as is the quality of the relationship with the type of partner who's also kind of has that, shares that vision with us as well.
Okay, so looking at this other really big deal, Tianqi looking at buying a chunk of SQM, also the big South American lithium player. Now, there was, as I understand it, some potential issue around the regulation front out there, perhaps a bit of tension with the Chinese saying, now, come on, you've just got to roll over on this one to the South Americans. How much political pressure will these big companies bring to bear, do you think, to get what they want?
I think what governments around the world always look at is, in particular, strategic assets. And SQM does have a phenomenal world-class asset in their Atacama operations. They are one of the largest lithium producers in the world. But I think between the two governments, from my understanding, Chile has a very good relationship with China on a political and diplomatic basis. But also, I think, they are able to find a win-win situation where Chile recognizes that, it has some very valuable assets under its umbrella. But also at the same time, lithium is actually a very important market and will continue to be for the future in terms of the development of electric vehicles and also energy storage. So I think they will be able to find a win-win situation.
Right, good. A lot of people, of course, are talking exactly your talk. The lithium index, which is sort of one way of looking at this, has gone up, as I understand it, from $100 to 300 since 2015. I mean, it's just, incredible growth, or rise in that index there. What if down the track we suddenly see cobalt or nickel becoming, a better way or cheaper way to put batteries in, to make batteries work in cars?
I think one of the interesting things is, obviously, you mentioned a couple of other metals there, which are obviously now coming into the fore, which are increasingly being used in lithium battery cathodes. But one of the things that you will tend to find out is that once you look across the whole spectrum of technologies, you have a range of different cathodes in electric vehicles and in storage systems, anything ranging from lithium cobalt oxide to manganese oxide, lithium iron phosphate, onto nickel cobalt manganese, as well as nickel cobalt aluminium. One of the common themes in that is that all of those batteries actually contain lithium, and they contain varying degrees of different combinations of metals. So I think we're in a good spot as far as lithium is concerned.
Right. Let's go to your Australian project at Mount Catlin. Quarterly update this year. The market perhaps a little bit disappointed. Again around cost, but your production looks up. Yeah.
I think yes. We are still very much on track internally. I think one of the things we were working through the course of Q1 is a little bit of seasonality through our mining plan, but we've basically stated a production guidance of about 200,000 tons for the whole of this year, and we remain very much on track for that. And in terms of kind of our target financial performance, we've been guiding the market to expect performance of somewhere in the region of a net cash margin of about $450 per ton of concentrate produced. So off 200,000 tons to be produced this year, you can get a sense of the scale that we're looking to produce in terms of cash flow. And
your cost management regime is under control?
Very much so.
Cool. Okay. Now, one of the things that's happening for Western, obviously, this is very good news for Western Australia generally, as was mentioned in the budget. Particularly out at Kwinana, there's a lot of noise around processing of lithium. How far is this going to go, and how will it impact you guys?
I think that's a very good question. If you look at the amount of lithium that's produced in the world today, increasingly Australia is playing much more of a leading role. Historically, most of the lithium that got produced in the world essentially came out of Chile and Argentina, and I believe as of last year, Australia has actually trumped Chile in terms of market share of delivering lithium out of the ground. One of the key differences of lithium in Australia is that actually the initial stage of product that gets produced is a concentrate, which for the moment actually predominantly gets converted into lithium chemicals, be it carbonate or hydroxide, and all of that conversion capacity sits in China at the moment. I think from the industry's perspective, it makes a lot of sense for there to be conversion capacity outside of China that may actually serve other customers in the region or even globally in North America as well as in Europe. And obviously there are operational synergies about having some of those conversion facilities not concentrated in China and potentially kind of closer to the mine.
Especially as you've got a lot of little, I mean, those processing facilities could presumably serve lots of little, smaller players and make things more efficient for them?
Yes and no. I mean, you do have some very large conversion facilities and converter players in China, but I think some of the projects that are being proposed in WA are also of significant scale as well. So I think, the market is growing quite rapidly and expected to grow from circa just over 230,000 tons last year, probably close to about somewhere between 800 to a million tons of lithium carbonate equivalent required by 2025. So I think the pie is just only going to get bigger, and obviously, in order to supply that, we're going to need more capacity to come online.
Yeah, and just one more on processing. Electricity prices, energy prices. I mean, what does it take to refine lithium? Is it as greedy as, say, aluminium?
Probably not, but obviously there are other inputs that have to be considered in terms of thinking about a conversion facility, irrespective of whichever region or jurisdiction you put it in. Obviously, reagents such as acid, soda ash, lime, access to natural gas, cheap energy, and obviously an ability to deal with the waste product as well is also important.
Okay, finally, Anthony, what do you make of your shorters?
I wish them luck, but I think in terms of our growth prospects going forward, I'd hate for them to be caught on the wrong side of the trade.
I think you're very generous wishing them luck. Anthony C., thank you very much for joining us. Good to talk.
Thank you very much. Bye-bye.